Good morning. Welcome to today's update. I'm starting with gold. Oftentimes we talked about when we are trading or we want to look for pullback or a deeper correction to load in more along the trend of the trade. But when you are counter trading, you have to be careful. Counter trading, you want to reduce your risk. You have to use a very sizable or a small lot size that you know if anything goes wrong, you can still manage it. You don't want to load in a whole lot of lot size when you are counter trading. Those are basic things that we say. And counter trading, you also have to look at what are the possibilities that the trade can present you. At what point will something change and the structure will change entirely? This is the weekly. We know that we've been bullish on gold, and up to now, we've still been bullish. And this is the weekly candle. And what we see here is a price action for a correction of wave 2 to this run, and which we believe has done maybe about 40, is yet to tick 50 as it retracement. Yeah, about 38, just a bit below 38. So it has not even ticked 50 or 60 to make it a proper wave 2. Now, we said also that we are looking at a potential zigzag to the downside. Now, this may have come down to this point as a wave A and the entire run as a wave B. We saw a price action here up to this point, and we thought that price is going to continue to just make a little high of correction for us to drop to complete the leg of a zigzag. Now we have to look at this and see at one point in time this thing will not be a zigzag anymore. And once it's not a zigzag and we break the top, then we are going bullish again. So we really have a very, small chance of this still being a zigzag. And if not, it's going to go back up. So we're going to look at that. Now, this is the monthly high so far. If you quickly go to the monthly candle again, let's go there and see. So this is where it has ticked for now. It has ticked this and ticked this as well as the monthly high, okay? And then the weekly high, or where we thought that on the monthly price may not want to break, maybe is this point, which price had broken now. So let's go to the weekly to prune it down. On the weekly, so this is the high so far that the price had done. So the weekly resistance will be this high here around this area, that we don't want to break this high here. But then the high also has to make some relevance to what has happened so far in terms of correction to the upside. So let's look at that high. Now, price made a 1, 2, 3, 4, 5 to the downside. And the fact that is a 1, 2, 3, 4, 5 to the downside is, now you look at, then when price creates something like this, like a wick, price will still fill it up before the proper exchange or movement. So there's a feeling on the weekly here. Here it's a week, then a feeling. Let's look at the monthly to see the exchange. Now, you look at when price make a week, they came back to fill to some extent. Here, price made a week, they forced the price to the upside, came back to fill it a little before going up. So price can create a rejection on the upper time frame, and we'll still want to go back there later. It might take years, it might take months. Like from here now, this was created March last year, and price didn't come back here until May this year. That's about 14 months to come back here, and price is now probably going to go back. But now price is making higher high, so we have to know that even though here this week price came back to close. So I still believe that this monthly week here has to be closed. Price will still have to come down in a way to close it before moving, because it's just a clear rejection here. It doesn't have a body, so it's a rejection. So price will still bring the body down to close properly. That's what I think. I still think that there are liquidities in this area to be taken on the monthly. So far on the monthly, that's the way it's appearing. Well, again, the fact that the price had done this also to have this close as a body may just cover for this week. But on the lower time frame, we might still have this body coming to the field. So let's go to the daily. Now, the daily price made this move to the downside: a 1, 2, a 3, a 4, and a 5. And ideally, we would expect that if price should do a 5, then what we should see is that price should still make probably another 5. That is 535. It's supposed to be 535. So, and for us, we thought in the middle here, we had seen like another maybe 5. When we look at it, we'll see what it has given us really here, But with this move to the downside, we are taught that the price will just go up to do a pullback and continue to go down. So this was not expected, and it's not necessary for the structure we are looking at. So as far as we are concerned, the last place that the price must not break now will be 85, because once price takes 85, then we have to forget that this is going to be a zigzag. We have to forget that. It's only a zigzag that can still walk a little leg down to make it deep. A 90 is going to give us a running flat, and it's not going to go deep, and it's going to go up. So a 90, and if the top is kissed or broken, then price will just have a small pullback and will continue to go. So we need to, in terms of, we are thinking of a zigzag, 85 is the end point of a zigzag. So if you look at where 85 will fall, 85 falls here at 1998.45 on the daily, 1998.45. So that was why I said you can put your stop loss at 1998.80 because of the spread. And that is what we can do. We cannot do more than that. So anything more than that will mean that the zigzag structure is gone. And we have to now begin to now look for price action. If we're going to get a price action that will now give us probably a shallow pullback, and price will continue to go higher. There's still a small chance of this being a zigzag, and that is what it is. And when we are counter trading also, we have to be very careful, how we take a trade. We are not in control of the structure. Structure can be manipulated, but we still hold the view that price will not just give us a 1, 2, 3, 4, 5 here. There's still something that they're trying to do, which we'll see over time. Let's go to the 4-hour time frame. Because right here, price is 78, and when price is 78, we thought that that will be the end, which will still work with the zigzag structure that we expect. As a matter of fact, the structure in here, it's like maybe a 1, 2, 3 here, probably a 1 and a 2 here. That's the structure. Then a 5 here, 4, 5 here. So this one would have just given us the C part here, would have just given us a 1, 2, 3, 4, 5 to this point. So make it an A, B, C here. And this appears to be a wave 2 structure for us. A wave 2 structure for us. And this is actually 5 waves at this point, 5 waves. So to make it a C, so an A, B, C. And that is what we thought. And that we are coming down. But again, in this trying to come down, where it has been falling for us is because it has made just like a 1, 2, 3, 1, 2, and a 3, and clearly not like a 5-wave structure that we would expect normally, and that this one is still trying to grow up. And that is why we have to be very careful. If price gives any reaction to the downside here, we have to be trailing our stop loss. That is one thing we can do. You have to be trailing your stop loss with every breakout structure. You have to trail your stop loss, because this may actually now be an A, a B, and a shallow C to break up. So you must really know that if we get a reactions around this area, then we have to be trailing that stop loss as it's breaking structure to the downside. You have to be, in case price wants to spring back up. So, and you can that way reduce any potential loss. But at this rate, once this price is crossed, just fold up and try to look for, let the price go up and come back before you join it. We are still not getting any reaction here. This is not a good reaction, even on the 4-hour. Yeah, maybe the momentum may seem to have been lost. And this is just 2 hours anyway. This still has like more, like 2 hours, 30 minutes for hits to close. Anything can happen in between this zone. We need to wait and see, because this may just be an A, B, and a C for further upside. And of course, it could just still come here and make this the last correction. And this one will just go up, and it might still be part of the complex correction that we are noticing, for this one as an ABC, or a combination of maybe an A and a B, and this and coming up. So, but the recipe is becoming nauseous for us, very irritating. So very irritating, and that is what we can just allow here. And let's see on the 1 hour time frame. So on the 1 hour time frame, so we are noticing that break of the top, but we can still get here. And this is what I said, that this one quite didn't form like an 1, 2, 3, 4, 5, that we should expect a 2 from further downside. On the 1 hour time frame, you can see that the structure is 1, 2, and a 3, an ABC, A, B, C, of an A, B, and these also If you look at this also is like the last one, like a 1, 2, 3, also a 1, 2. Maybe the third part here is what now formed a 5-wave structure. I think I was telling someone that it can happen like that, where we have this one, an A, B, and a C, and a B. Then we now add this, an A, B, and this A and B, they're not 5-wave structure, but this one is a 5 structure. So let's see, and let's confirm what I just said in here on a lower time frame, probably on the 15 minutes time frame, and see. So on the 15 minutes time frame, so we can see that this is like an A and a B and a C. So even this C also looks like a 5 wave structure. Like from here, a 1 and a 2 and a 3, a 4 and a 5 before we had this B. So, but in between here, this is just like a 1 and a 2 and a 3. Then we have a B. So this is not a 2 because the retracement of here to this point is not even close to it. So that's why how we know it's just a B and it's not, yeah, from here. So that's just like around 40 or about 40 something. So it's a 1, 2, 3, and the last part here is a 5-wave structure. This also is a 1, 2, 3, and this could have been a 1, 2, 3, 4, 5 to the upside anyway, which is 5 waves. The B, this would have been the 4 and 5. Probably if you go on a smaller time frame, you would have seen that the 1, 2, 3, 4, 5. Then this also came down, which is the last part of this C. Actually, I think it came down in the 5-wave structure. Yes, 5 waves. Yes, 1, 2. The B part is the 1, 2 here, and the third wave, and we have the 4 and the 5 here, or probably the 4 and the 5 here before this. This does not look like any structure that you can call a 1, 2, 3, 4, 5. That's where it's falling, really. It's a falling looking wave. And when it's like this, it might just mean that they just want to continue to go up like that. And this may just be the first part of initial wave 1 of the move to break up. And it can go like this without giving you an internal format. It will just be the old one. They now have it an ABC2. You know, it could be funny anyway. So we still don't know what to make out of this. And we are not getting enough reaction to the downside. We are not getting any enough reaction to the downside. So all we can do is to begin to trail our stop loss if we begin to break structure. So the first structure to break, it will be this one to the downside. This will be the first structure to break to the downside here. So, and we will be following up. Because to break this structure on the 15 minutes time frame, we'll be following up on that. Let's see what it gives us on the 30 minutes time frame. Yeah, this is the structure, first structure to still first break to the downside, because this is the momentum candle that broke it. So breaking this to the downside, we can probably bring our stop loss very close, you know, and that's what we can do, and aiming for it to move further down. So, and that's it for gold. Now let's look at Euro USD. Let's look at Euro USD. We need to actually see this close. We need to see this close. 2 hours, by the time it's 4 hours, we need to see the way and manner this one is going to close. We need to see it close. We really need to see it close if we're going to get a further downside. This is quite sharp. This is like a momentum. It's quite sharp, very sharp. It's giving us a vibe that they are already moving to break up, but we need to see. Just if you can hang on and count your losses after this point. Price getting here, I know it's going to break up. This is the last place. Price moving up is going to break up. So Euro USD. Euro USD also is sprinting to the upside. But we need to be careful also. We've not gotten any price action. Price had gone up by almost 15 pips beyond our entry. You know, price had gone 15 pips beyond our entry. And that's why, you know, I said where we can begin to look for our, let's look at the monthly, because I gave us those points, those area. So looking at the monthly, I said, these are the areas, the first area where we have the body closed properly. And of course, where we have this wick, which is around 10,700. So for now, if anything, if prices has worked against us, we can come up on this top, let's say around 111. Price would have a reaction between here and here. Let me just bring it out. If price is not going to correct deep, price is going to have a reaction between this head here or this one here. So those are the two levels that we expect. We just add like 3 pips on top of this one. 3 pips, it's about, let's say, 111. Yeah, 111, 1.1100. So that's the stop loss. We should get reaction and begin to trail the stop loss to the downside. We're going to get a deep correction. So that's what we can do. So it's almost there. It's almost there. The momentum is burning down. You know, this level of 10, almost 1.100, and here is where we think it's going to turn down. Let's see. If I have those marked. Yes, I have them marked already. So this level and this level, I have them marked already. Those are the 3 levels of, yeah. So I have this marked already. Yeah. So those are the levels on the monthly that we can still hide, where we can hide on that to further see what the price is trying to do. So like I said, between here, somewhere higher, so this is the last place I still expect price to come to. We're almost there, which is 0.9882. And a breakout of this first daily resistance and the second daily resistance means that price may push further up. But then if that happens, in case that happens, this is where we should come and hide. Price may just, price can pull back any moment from now, really. You know, price had broken 61. This is 61.8 of the daily extension, and this is 78. So this is 78. Price is not expected to do this. So a 1.11000 to hide, not to lose your money, will be an ideal place to hide. and we should get a reaction anytime soon for further downside. Yeah, because they have this knack of, we are saying that if you can endure, that's why you don't throw a big lot size, not until you see the price action and a confirmation of a break of structure in the line of your trade. So that's one thing you have to always know to do. So you are going to enjoy about 135 pips or 134 pips if you have already entered. So we've not gotten any price action. We're just seeing evidence of momentum loss. That's what we are seeing. We've not gotten any price action to go down. No price action yet to go down. I'm just trying to give us an update and also to look at the price action. So the daily price action has not given us anything except momentum loss. Then the 4-hour price action, also, it's just that of momentum loss too. You can see momentum loss, and we believe that this is the last wave, and we are still trying to ride and come up, and probably we can get to this point before we get a reaction. So we hope it won't go past here and break this daily resistance before we get reaction to the downside. You can see the way it's falling. It's been falling to the other side of the trend line, which signifies, you know, all these things are just for liquidity grabs, which is still allowed within the structure before the price begins to fall. So it's when the structure is broken to the downside that you can now add probably your own big positions. So we still need to wait for that to happen. We need to wait for that to happen. So which structure are we going to break now? And that's before you think that you want to add. On the 1 hour time frame, it's still not a good push. We need to see this close. We need to see this close now. We need to see it close. This is just the first sell. We need to see the way this thing can still push up. It's not a good enough price action on the 1 hour. It's not a good one. Let's see, 4-hour structure break is what we can begin to, do we have any structure here? And this is the structure we can break. So it's still the same structures that we're looking at. This is the structure that I talked about at 1.09, 130. So once we break this structure to the downside, then we are good to go down. So it's still the last structure here, which is this correction, and this is the last structure here. That's what we can look to break. So we need to see 4-hour price action to confirm where we are going. And that price action is going to be probably with some momentum, not this kind of a price action. That is what it's giving us, with some momentum. We don't have that yet. We don't have that yet. So having said that, that brings me to the end of the update. This is not a good price action for us to accept. This is the last structure here. This correction before this ascent. So this is the last structure here that we need to break to the downside before we confirm that we are ready to move down so far. And that is a clear 52 pips to the upside. That's a clear 52 pips to the upside. And we can still go further up. But we need to see this gradually moving to the downside before we can trust this. We can't trust that the price is going to come down now. All right.